All right, so I'm gonna do a review of the trades I've taken this week. So I've taken 2 trades on GU and 2 trades on gold. So quickly go over those trades I've taken. If we start off on DXY, the bias wasn't too clear on the weekly time frame, right? But we have this swing high here on the daily, on the weekly time frame, and we came and ran this high, closed back inside of the range, and we tapped into this weekly order block and weekly breaker. So at this point, price can do 2 things. We have this bullish daily inversion fair value gap. Price can retrace into it and then continue higher, or at least take out the previous week high. Or we can, run the previous week high, or maybe not even run the previous week high, come into like the price action is horrific here, but come into some sort of high, like this order block, for example, sell off from here and then come and take out all of these lows. So there's a lot of scenarios that can happen here. Price can turn bearish from sweeping this high, or this could be a retracement and price can continue being bullish from here, right? So I'll remove all of these lines. So yeah, price can turn bullish here and continue high time frame order flow, or price can reverse from these highs and turn bearish. But yeah, at this point, I want to see what Monday would do, right? So of course we had the buy side sweep last week, and then price went lower, and a lot of people would be looking for shorts here, but at this point it's probably too early to look for shorts. You want to look for shorts if we can sell off from this 4-hour fair value gap, or lose the daily key level, which is this 4-hour this daily inversion fair value gap. But what we did on DXY is retrace lower, swept this low into the daily bullish key level, and then we pushed higher. And then what made this even more high probability is that we closed above this 4-hour gap, this 4-hour bearish gap. If Paris was bullish, if Paris was truly bearish, we would have retraced in this 4-hour bearish fair value gap and then sold off and made a new leg lower. So let me just remove this for now. But yeah, we would have sold off from this area and then attacked all of these lows, but we didn't, right? We continued higher, formed this 4-hour bullish fair value gap as well. So this also becomes a BPR, and then we continued to slow grind higher, and then the rest of the week we just consolidated. But at this point I was already positioned in GU shorts, anticipating that Mondays formed the low of the week here, 4-hour order block, sweep into the key level, and then at least take out the previous week high here. And then the reason I picked GU over EU, right, is because if you look on a weekly time frame, there we go. If we look at the weekly time frame, we've had this weekly bearish fair value gap, right, and we closed below it. We've had a buy side sweep, displaced lower, retraced into this fair value gap, seen a push higher, and then we've had a fail swing at this point. So this this push higher was basically a retracement, and we made a new low, and we closed below the swing low on the weekly time frame, and we closed below this weekly fair value gap. So at this point you can anticipate that the next week can be an open high low close into this bearish key level, and then come for the previous week low at least, and then this low as well, which is on the monthly time frame, monthly fair value gap. So that was my high time frame draw and liquidity. It looked very clean on the on the high time frames. So yeah, and the reason I picked GU over EU, right, is because if you can see on EU was the more bullish pair. We didn't even close below the swing low or this fair value gap on the weekly time frame, but GU had that closure, and GU didn't have that monthly fair value gap as the draw and liquidity, right, but GU does. So that's the reason I was focusing my attention on GU. And if you look on GU, right, we have these previous day highs, relatively equal highs here, inside of the bearish key level. So if DXY was to turn bullish, then my focus would have been on GE, right? So yeah, we engineered this high, which is a daily high, 4 hour also equal highs, daily equal highs, 4 hour fair value gap, but daily weekly inversion fair value gap. So I'll just remove that for now. And then we had the sweep into it, and then we had the second sweep, which is usually like the high probability signature I look for in price for a reversal, and then at the time that we swept it as well. So we have the price aspect of time, where price is trading at a bearish key level inside of this bearish dealing range, trading inside of the premium, high time frame key levels, sweep into the high time frame key levels, 2 sweeps. So, and we formed the high of the day in London session as well, right? Or just before London session. Yeah, 1:45, so 15 minutes before London session. So in terms of time aspects, Monday also is likely to form high of the week, either early in the week, so Monday or Tuesday, sometimes even Wednesday could be the midweek reversal profile. But yeah, then at this point I was anticipating, I had a clear narrative to look for shorts. High time order flow is bearish, clearly bearish. Weekly had equal lows. Monthly fair value gap also has a higher time frame drawn liquidity. So at this point I was saying, okay, this is a likely high of the week form here, and we're probably just going to go down and come for previous week low at least minimum, which was my TP level. So what I did on GU is we formed this bearish order block here, mark it out. We had the bearish order block, and then we next hourly candle came and tapped into the bearish order block on the hourly time frame, and then we displaced lower, basically made a lower low in a 15-minute time frame. You can see 4 a.m. candle came into this, also this inversion fair value gap came into it, and then we broke down lower, made a new lower low at that point. So at that point my anticipation is that we have this new order block. We'll probably come and retrace into it and then start breaking down here. So there's either 2 things you can do here. You can either wait for, if you want to be more conservative, which is probably the better approach, you can wait for this hourly fair value gap to fail, and then you can go short on the retracement, or you can anticipate that this hourly fair value gap is already going to form. And for me, because we also closed below the swing low and we sold off from this hourly order block, I already took a short on GU, right? So yeah, I already took a short on GU here. My stops were at the range high, I shorted here, and then my TP was at the previous week low for almost a 3-hour trade. And then next hourly candle closed below the fair value gap, so I was pretty confident at this point that we would continue lower. We had multiple bearish PD arrays, fair value gap, inversion fair value gap, bearish order block. So at this point I was pretty confident that we would likely just sell off on Monday, just form the high of the week. Then we swept this low with the flat open, and then we retraced into the order block again. So at this point I was a bit concerned, right, because closed above this hourly fair value gap, which we should have used to sell off, and then we closed above this inversion fair value gap. But at this point price can still reverse from this order block, right? So there's no point in cutting the trade for, you know, a 0.6 R loss or something, just to, when price can still reverse from this area. And then if you look at DXY as well, DXY closed above this whole imbalance on the hourly time frame, and we form multiple bullish imbalances, right? So price can, you know, retrace into this bullish dealing range, come into the OTE or the discount, and then continue higher, which is what happened. And then on the 4 hour as well, we have this 4 hour BPR, which price pushed higher from. So at this point there's not really a point in cutting the trade. The trade's not really invalidated yet, even though it's not doing what I like to see. The trade isn't invalidated, so it pushed higher, and then at this point it's is a bit of a trapped order flow, right? Because we have the bearish order block with the sweep above as well, so there's a high resistance liquidity. But then at the same time, we also swept this low. We swept this low, and then we inverted this. We had this hourly bullish BPR. So at this point, is a bit, it's a bit conflicting whether we go higher or lower here. So I just held the trade, and then once we started to break down here, at this point, at this hourly candle closure, I moved my stops from this high onto this high, right? Because at this point, you don't want to see price to lose this hourly BPR. Once we close below it, you don't want to see price to lose the hourly BPR and come back for this high. Because if price comes back for this high, then is it likely that price is also going to come for the Monday highs at that point. So trim my stops to this high, and then DXY looked good as well because we had this hourly BPL, right? We inverted it, which is a bullish sign. So at this point, I was anticipating that, okay, daily also closed pretty well. Daily close back inside of the previous day's range, so the next day is likely going to be continuation, and then we can seek the buy side, which is the previous week high, which is my minimum drawn liquidity, right? That I was expecting. So yeah, I wanted to see a price to continue higher from this order block, and this hourly BPR as well. And then we had this buy side, the sell side sweep on DXY, swept the pre-Asia lows or the 1 a.m. lows, whatever, swept it, and then pushed higher. So I was anticipating, okay, this low will probably hold as an invalidation, and then we'll come for all of these highs at this point. And then G had a nice AMD framework. It was it's pretty choppy here, to be honest. But yeah, we had this consolidation, and then we have the range highs here. Go on a 15 minutes a bit cleaner, but yeah, we have this consolidation, and then we swept the range highs and formed the high of the day, right? This is a lunch high, but because of how clear the manipulation was on DXY and GU, I was anticipating this was likely the high of the day that formed inside of these inside of this bearish BPR. This the hourly looks pretty shit here, to be honest, but you can count this also as an order block as well. So yeah, at this point I was anticipating, okay, if price this is likely high of the day form, right? So we should just sell off and continue and come for all of these lows at this point. And if you look at the 30-minute time frame, this is what I used to take my second entry off. We had this bullish fair value gap, right? And we had a buy side sweep. So if we close below this fair value gap and turn it into an inversion, then that's likely price going to seek sell side liquidity after taking out the buy side. And this is likely the manipulation, the Judas swing, whatever. This is formed the high of the day. So at this point I was like, okay, cool, we've closed below, so I'm gonna take an entry, anticipating New York's gonna be straight up continuation. So I shorted this candle here with my invalidation at the high of the day, and then my TP was the previous week low. So what happened was price consolidated, and then stopped me out here. And then on my other accounts, I had my swing position still here, just in case price reached the high one more time, right? I didn't want to get stopped out of this position, just in case price I mistimed the short here, and then price comes for the high again and then sells off. So yeah, got stopped out of this position for like 0.6, and then I took a full loss on this trade here. And yeah, we had this massive push higher, took out the Monday highs, came back lower, back inside the range, consolidated, went for the highs again, so came back lower, and then yeah, now we're just in this massive range on pound and DXY and euro. So yeah, what I was worried about is if price, this is going to be my break-even level, which we didn't get to, But yeah, I was also worried if price would take up this low, because when such a tight range, price could sweep this low and then come back for my SL. But yeah, on EU on that day, I think we had some sort of SMT, right? We had the Tuesday. Yeah, we had the Asia lows, which we took out here. You had a similar framework. We ran the Asia highs, came lower, took out the Asia lows. On pound, we took out the Asia highs, and then we failed to, because the correlation is not that the correlation was not the strongest with pound and euro on that day. We had SMT at these lows, while euro already took out these lows, right? We already took out the London and Asia lows, but pound failed to take out these lows here, and then pushed higher. Euro also pushed higher, but didn't even get above the London highs. Pound was way above the Monday highs and the London highs, while euro didn't even go above the London highs, and the Monday highs were still intact as well. So yeah, I basically got cooked by at this point. We had this daily fair value gap on euro GBP, and the moment I shorted pound, you know, we had this massive dump on euro GBP, which stopped me out on pound, because that meant pound was the stronger pair and pound just ripped higher. And DXY also at the same time, we had this London high, which price reversed from, not reversed, but price gave a deep retracement and came back for these this low, which I was anticipating to be the invalidation and hold. So price went for this low one more time, retraced higher, went lower, went higher. So yeah, this right now, this is basically a seek and destroy profile, and I got caught up in it in pounds. So once I seen price doing this shit, I pretty much stayed out of majors for the whole week, because this right here is just seek and destroy profile. We're in a clear range, we're unable to come for the range highs, and price is just stuck inside the mid range, you know. This is just a range, right? Range high, range low. We're we're inside the premium now. We came back lower, back into the mid range, and now prices came back for this high again, and then came back for the lows, and now prices in the discount, back into the premium. So yeah, this is just clear consolidation, right? As soon as I seen that price was unable to come for these highs, and then if you just look at the 4 hour time frame, at this point when you see these small body candles, that's the clear telltale signs that this is consolidation, and price is likely just gonna stay inside this range. So yeah, at this point I disengaged from majors, no clear bias, and it's good that I disengaged on majors, because at this point you can see that not only is this in a range, but look how decoupled it is, right? Because DXY is in a range, euro is also in a range, and then pound looks bearish here compared to pound, a bit compared to euro, and that's mainly because of the euro GBP influence, right? Daily went higher from the daily fair value gap. So once you see there's movement in euro and pound, but it's mainly because of euro GBP influence, then that's also another telltale sign that price is in a consolidation, because price is not moving because of DXY. Price is only moving because of the euro GBP relative strength. So yeah, at this point I avoided majors, because I knew that price would probably reject from this high and come back for the lows again. That's what price does in seek and destroy profiles. It comes for the range highs, goes back to mid range, goes for the range lows, comes back for the range highs, etc. So avoided majors after that. To my L, lost I think 1.6 off on pound this week. And if you look at the profile for DXY this whole month, it's just been consolidation, right? Consolidation again, dump out of session, so no way to get involved in this. Consolidation again, and this is probably the only move of the month that was the most high probability, right? The fair value gap, weekly highs are drawn liquidity. So if you caught a move from here to there, then that was like the only high probability trade of the month on DXY that I can see here on the 4 hour time frame. Other than that, the rest is just consolidation here. So yeah, pretty shitty price action this month. Currently I'm down 6R for the month because as you can see, DXY consolidation the whole month, Euro consolidation, just pure back and forth. Even right now here, equal highs, equal lows, pound as well, equal highs, equal lows, and the price pound is not even heading for these lows yet. DXY equal highs, equal lows inside of this range. Gold, massive range, and I've taken losses inside of this range as well. And then NQ as well, also in a range, equal highs, equal lows, and yeah, that's pretty much it. Just got absolutely cooked this month inside of this range, and to be honest, I didn't do a weekly outlook last week because of this range that we're in on majors. And to be honest, this week I probably won't even do a weekly outlook as well because there's nothing really to say, right? Price is consolidating on all pairs, so you know. But yeah, we'll quickly do the gold review while before this gets too long. So on gold, closed above the range highs. We had this daily fair value gap, which is the key level, and the Monday lows. So we set the Monday lows into the daily fair value gap, and then we had this high as the drawn liquidity. So at this point, all I needed to see was some hourly bullish structure to form, which we'd had right here. Tapped the daily fair value gap, pushed higher. We came back for this low, which is more clear on a 15-minute time frame. But bullish structure forming, stop run, another push higher. So at this point, we're clearly in bullish order flow on the hourly time frame, disrespecting bearish PDRAs, inverted this fair value gap, and forming bullish PDRAs. You know, we now form this propulsion block, right? Count this as a bullish order block. We're chasing into it. Sweep, closed above the down close candle, forming a bullish propulsion block, fair value gap. So yeah, at this point, because I missed the entry here, right? You could have longed this fair value gap with stops at this and lowers the invalidation, and then TP at this high, and then you could probably even put the invalidation at the 50% of the wick, and then you would have got you would have got break even at this point, because I would have gone break even after we set this high. But yeah, I missed this entry, so I had to get in on a lower time frame confirmation at this point. So yeah, tap the hourly fair value gap and propulsion block inside of higher time frame bullish order flow, and we tap the bullish fair value gap. So at this point, what I was looking for was some sort of confirmation on the lower time frames, and I took an aggressive entry, right? We had this order block on a 15-minute that we closed above, but I don't usually like taking these order block entries because, you know, price can come into these imbalances and then sell off here. But because the higher time frame was bullish, I was more willing to take the risk here, and I just longed this candle here. Well, my validation was actually not there. My validation was at this candle here. Put out this 5-minute candle low, and then my TP was, of course, the Monday highs. So a typical Monday range play, bullish key level, and this is usually the highest probability framework that I like to use, right? Because we get a previous day low sweep into a bullish fair value gap inside of the higher time frame bullish order flow, and we have Monday highs as low resistant liquidity, right? Then that's always the most high probability framework that I like to use. So yeah, I was aggressive with my entry here, and what happened was that I got stopped out because of my shitty because I trade with funding pips. Took on my funding pips account, and I basically got stopped out to the wick on this drop lower. Didn't hit my SL, and then price went back up higher. What I was open to was if price would form a propulsion block. Usually I wait for propulsion blocks in this case, but because I wanted to be aggressive in my entry here, along the order block, or the confirmation of the order block, and then if we formed a proportion block, I would have taken another entry. So we accumulated. I want to see if we could sweep these lows into the order block and then push higher. But price gave a deeper retracement, pretty much stopped me out to the wick here. Not on my trading view, but on my MT5 I got stopped out because of the shitty spreads from funding pips. So I got stopped out there, and then on silver we took out this low here, but on gold we didn't, right? So this is the SMT, pushed higher, formed this proportion block, but I didn't trust this proportion block because of these highs that we swept. On this high is a London high as well, so session high. If price is in a seek and destroy profile, we can just reject from the London highs and consolidate here, and then maybe even come for my stop. So I didn't long this, and at this point I was thinking, okay, it's looking like seek and destroy profile because we even closed below the bullish fair value gap. But we had this bullish order block, and on the 5-minute time frame we had this lower imbalance, which should have been a breakaway gap, but price tapped into it and then pushed higher, and then we formed another proportion block. So at this point once we formed a proportion block, I was like, okay, cool, we're clearly bullish, right? We're just forming, you know, bullish structure, right? Price is likely to just continue higher from here at this point, making lower lows. So yeah, I was like, okay, this is a clear bullish order flow. We closed back above the fair value gap, and we respected the propulsion block, and we formed a new propulsion block. So like, okay, cool, we're not going to reverse from the London highs. Likely we're probably going to come for this high, at least the minimum, and then if price can continue higher from this high, then got the Monday highs as the draw liquidity as my TP. So at the next hourly open high low close, I longed this along the next hourly open high low close. My stops were below the propulsion block because we have multiple bullish PDRAs at this point. If I put my stops at this low, the risk rule doesn't make sense, and this low should hold as the invalidation, because if price comes for this low, then we're going to close below this bullish fair value gap which we just got above, and we're going to close below this propulsion block. So you don't want to see price to lose the propulsion block and come for this low here, otherwise that's not a bullish signature. We're likely going to either keep consolidating, or we're going to come all the way for these lows or these lows. So yeah, longed it there, and then I went break even once we swept the pre-Asia highs or the post-Asia highs here. I went break even here, and it looked good because if you can see on the hourly time frame, we closed above this high on the hourly time frame, which indicates continuation, right? But then we saw the previous hourly candle high, came back into the range, and then I got stopped out here for break even at this point. And then yeah, I just realized that, okay, I thought I basically got stopped out to the pip here, but then price dumped afterwards and then went for all of these lows after sweeping this high. So yeah, at this point, close the charts, everything is just in clear consolidation. Like, look at this price action right here, and then we get a random pump on gold at the 8 AM candle, absolutely random. So yeah, clear consolidation on gold. So just like majors, just like NQ, just looks like pure shit. And yeah, now, so I took that loss on gold and a break even. So this week 1.6 2 point around almost 3 are down this week just from those 4 trades alone. So pretty frustrating week, pretty frustrating month. This is, you know, last month I had a 8R month, and now this month I'm down around 6R. So pretty crazy the way pretty crazy the way that, you know, things have turned in just a few month period. Well, not a few months, but in that 2 month period. So from January to February, amazing PA from January for me. I managed to catch shorts majority of the time on Euro. These shorts, managed to catch shorts here as well, and then we just had consolidation, and then consolidation again. So yeah, pretty price action, all majors, even UCAD, absolutely horrific. Managed to take a loss a week or two ago here as well. So yeah, we'll just see equal highs and equal lows as well. Well, everything's just in a range. So yeah, we'll just see. I won't do a weekly outlook this week, but yeah, we'll see what price action has in store for us for March, and hopefully I can make a comeback